What's up, YouTube fan? Just thought I'd do a quick video with the markets. Kind of had a small correction slash crash with the whole tariffs talk on Friday. I guess it was the 10th of October 25 here, 2025. So I just want to show, obviously things have been going great over the past several months. We've been, creeping up to all-time highs almost essentially daily, if not weekly. And I had basically almost it was actually almost a 6% correction where I was down almost 65K just in this one portfolio, which we'll dive into here in a second. Uh, and it bounced, it closed, it came back up a little bit to where it's basically 4 3/4. Um, so obviously, you have to be. I went through this with, as most people did, through the April correction, and that will eventually, depending on how long it lasts, will alter the income portfolio, which we're going to jump in snowball here in a second. But I just wanted to show you kind of the difference in approaches. Like if you're in growth only, where you're not really getting dividends or distributions and you're looking at total returns from a growth perspective, then something like this would be catastrophic because your portfolio, you lose 5, 10, 15% essentially overnight or in a few days. And then if you have to draw money, this went from, dude, this was, I think it was almost close to 970, 967, approaching 970, to a million. And then all of a sudden overnight essentially drops back down to 910, and hasn't been this low, I think, for a few months. So that's the thing. And they talk about sequential of returns risk, meaning depending on when you retire or when you're drawing money out of your portfolio, if you're drawing money on a down day, well, you're basically pulling money on your stocks and portfolio at discounted rates. So you have to, basically sell more shares, to get 50 grand or 20 or 30 or 10 or whatever money you need. Okay, so that is a huge differentiator. And these are just all, I'm not going to go through the losses, but it's basically red across the board. And my income portfolio took a pretty big hit as well, almost 5%. And I'm actually now at a total loss. I was up like 60 grand this week in profit and price appreciation alone, not including distributions. And then this got all eroded away to where it went all the way back down to, now it's showing a negative basically $300. And as you can see, it's red across the board. So let's pop over to Snowball Analytics. And if you remember my past videos, I was actually showing, like 490, 495. But again, I've been investing dollar cost averaging. As soon as I get, my distributions or, commissions or whatever have extra income, I essentially investing weekly, if not in some cases daily, into my portfolio. Now, I've been aggressive. I would probably suggest, especially in a market like this, to where maybe you sideline, 50% of what you would traditionally invest and put it in like a money market or something like that, where at least you're getting 4%, 4 or 5%. And then when the market dives like this, then you'd have what's called dry powder, a little white powder action, and dry powder, and you'll be able to pump it in the market at a discounted rate. So you'll see greater returns because you're kind of, it's called buying the dip. So you're able to buy the dip, buy stuff at a 50% discount, or not 50, but whatever, at a 10, 15, 20% discount, and have cash to do it. I don't. I've kind of been putting everything into the market. So I'm waiting for next week for my big distributions to kind of hit. So anyways, my adjusted annual gross um, income earnings is now almost 520, 516, 518, where in the prior videos was in the 490. So I'm up 20 grand or so, 22, something along those lines, 22, 25, something like that, from just a few weeks ago, because I have been reinvesting this whole time. So even in a down kind of dip in the market, I am increasing my overall dividend distribution, um, weekly, daily, whatever the case is. So I think that's something they don't talk about this enough. This is a huge thing. As the market dips down, and eventually, if we go into a long down cycle, then obviously this income dividends is going to take a hit, and it'll start to come back down. But my whole point of what I'm trying to say is that you're able to still generate income in a turbulent, highly volatile time and constantly reinvest. So if you're taking my advice of reinvesting, 75, basically between 65 to 80% of this number is constantly being reinvested no matter what market you're in, where you're able to buy a bunch of stocks at a discounted rate and you're just dollar cost averaging. So um, and that's the power of income investing. And we've been having great weeks up until then, so these numbers are still going to be high, because we've been in a huge bull tear for like the past 6 weeks. Continues to do all-time highs. So uh, they've already come out with the earnings for next week, even though the market's tanked. So that's not going to be affected. My next week's distributions is not going to be affected with what happened on Friday. However, if this continues, if bad news continues to hit, so on and so forth, then yes, you will see a dip of 10, 20% or so of income, and this will drop down, probably like another 80K or so in annual income off of these funds. But again, when you get it to this level and you're only living off like 100 or 120 grand a year, you have a lot of room to play with when the market does dip, and you're still reinvesting and buying shares at a discounted rate. So that's very, 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 very important. And let's go over to the holdings. Let's see what we got here. Um, and you're going to see a lot of red if you look at the past video. Um, last week, you'll see a lot of green. I think everything was green last week. So if you look at the total profits here, ascending order, so you could see that even in a negative market, uh, the daily took a hit, but again, total profit since inception of owning these funds and accounts still in the green for the most part up until here. But I don't have a huge position in Berkshire Hathaway quite yet, so that actually a good time to buy if you had some cash. Some of these are definitely a good time to buy. But that's showing a negative. My Nvidia position for Robin or Round Hill is at a negative $550 total returns since I got into that position, and then all the way down. And some of these are single stocks, like I said. I was trying to create a distribution fund when I first started, and then kind of morphed into these ETFs, and then into income. Um, MicroStrategies took a massive hit. I think I finally got into the profit range last week, and then we're already back down damn near 10%. So that's almost 4 grand. And I'm trying to see, I don't think I see anything else. So that's, I think, my largest hit right now is MicroStrategies, which is also known as Strategy. Now they changed their name. Yeah, this was taking a massive hit for a while, which was Coinbase, but that's actually still in the green for total returns. But anyways, the whole purpose of this video was to show uh, even in a down market, the portfolio took basically a 60K or so hit in a short period of time, and we're still able to show between 515 and 520. So we had about a 20K growth